doing today, brothers and sisters? Hope everybody is good. It's a bit of a rainy day today. I don't know if you can see that. I always record in my car. I don't know why. It's a comfort place for me. But this is Danny with DM Finance. I dropped the short for quick tips and tricks. So this video not gonna be a little too long. Hopefully not today. Right. So stocks I was talking about that you could buy right now. We in a very red market right now, and it's foreseen for like 2023 that's going to be even worse. So I'd say if you can start a small position now, and then dollar cost average. I have a video about that that you could check out. Dollar cost average into the market, and it's a good time to buy. It's a good time to buy right now, and it'll be an even better time to buy when everything dip. Or you can hold your money to where the projected dip for the market to be red, even redder than it already is. It's been a bloodshed, honestly. Like, my account is down like 2,000-3,000. But quick thing, I wanted to talk about dividend stocks. So I spoke about it a little bit in dollar cost averaging and what is stocks on my first videos, the first and third video I released. So to use my phone to pull up my portfolio, because I don't have a laptop just yet. As you can see, like I said, I don't have really a big portfolio. Down for Friday over $100, right? But stocks I really look at, that I really buy, and that are in a buy zone for me as a dividend investor, is it's called MO. Ticker symbol at the top. MO, Altria Group. They're a smoke company, smoke shop company. Well, smoke company, not a smoke shop company. And they also deal with vapes and everything, and all those accessories. So the stock price for it as of closing on Friday is $40.38, right? Now, I originally bought the stock at my average cost basis of $46.27. Right there with the W next to it, that's for a wash sale. That's when you buy a stock, and then you sell it at a lower price, and you buy it back in under the 30-day mark. But one thing about this company that I thoroughly love, and a lot of people are like, oh, why would you buy a cigarette company? I mean, I don't think smoking is good. I mean, I vape, but that's just me. So, excuse me. If you look at the dividend rate, right? Dividend rate right there, it's 94 cents. So it's 94 cents a share, per share. I have a total of 61 shares, 61 and a half shares, with 61 shares. So being that I have 61 shares for the stock, and right now the stock price is at $40.38, right? If you go to a calculator, and 0.94 times, what did I say? That's 61. Let's just go with 61 times 61. So I'm getting, it's a little probably backwards for y'all. It's $57.34 a share. I mean, $57.34 every time that the company pays out, which is quarterly for them. They pay out every 3 months, right? So every 3 months, I'm getting, right now, if I was to get paid out, it'd be about 1 1/10 of a share. So, I mean, 1 1/4 of a share, I'm sorry. So, with that being said, I don't have to put that money in. Literally, the point of dividend investing is to buy, hold, build up your portfolio with it, and you will eventually be able to either buy a share or buy a multitude of shares with the shares you already have on top of what you're already buying. So I didn't get a chance to buy Friday because I woke up late, and the market, I woke up in the afternoon. I got a little one, so I was dealing with him all morning. So I took another nap, forgot to buy. You know, it's the usual stuff that happens to a lot of us. So with that being said, like, but it's a good stock to buy, don't get me wrong, because I've had the stock for probably 1, maybe 2 years, and I don't really pay taxes on it because I'm not getting a lot. So, but my goal to it is to get to 100 shares. Like, I have enough. Originally, my goal was to have enough to buy 1 share, and I have enough for it to buy 1 share when it pays me out. That's one good stock. I still think this is a good stock. I haven't heard much people talk about it. One of my favorite YouTubers, Chris Say, put me onto the stock a long time ago when I first got into it. BGS Food, it's a wholesale food company, and I'm down heavy in this one, right? I'm down 43%. Something's going on with food, if I remember correctly, and wholesaling the food and everything. But I'm not going to stop buying this stock, because even though it's down to $16.49 right now, right, it's still paying out 47.5 cents, which gets me right now 1 to maybe 2 to 3 shares. And I believe the only reason why they're down is the war. Well, I don't know if it's still a war going on, but the speculation of a war, or because of COVID. I doubt it's because of COVID, because it was doing pretty well beforehand. But I'm going to look into that. It's still one of my favorites to keep buying. I'm going to keep buying the stock, especially while it's down so much. Usually in a situation where you're buying a stock and you're holding for a long term or a long-term profit, with percentages down like that, which is, like I said, I'm down. MO, I'm only down 12%, well, 13%, and BGS, I'm down 44%. In that case, if you don't have no more faith in the stock, or you read the spreadsheet and their debt ratio is a lot higher than the money they're dishing out, right? You would not let it go under 20%. I would say 15-20%, because then that's down bad, and you're gonna probably have to hold it until you come back in a profit, which could take a long time, a very long time. With BGS, I'm not worried about it too much, because from what I've had it for 1, maybe 2 years now, and even when it's been down, I've been fine. Like I said, I have to research more. I haven't researched recently on it. Excuse me. I haven't researched recently on it about how is it going and what's going on with it. I haven't done none of that. That's on my part. I've just been busy and just doing other stuff, so I haven't had time to really go back over my portfolio. I've just been buying in, which is not a good thing. You should rebalance your portfolio at least every maybe 3 to 6 months, roughly. A rebalance is just you going in, changing stocks, and checking out what you could change or what you can make it better for better growth or better long-term growth. I'm just in for dividends, honestly, and the smart way for me, I feel like right now, is to research the company, and if I already have the company and I'm down a lot, just hold on to it and dollar cost average down. Like, that's really what I recommend. It's kind of it's my personal bread and butter right now. Another stock that I have it's been doing good for me since I got it is WMB, William Incorporated. If I remember correctly, they're like a small bank. I'm sorry that I don't have the exact. I haven't checked it in a while. Like, I used to have everything written down, and I should have everything written down, honestly. But I just wanted to throw out this video real quick just to get either some feedback or some I don't know, either some feedback or have a conversation with anybody in the chat about what they the chat at the bottom, or the comments at the bottom. I'm sorry, the comments at the bottom about what they think about the stocks that I'm recommending. Once again, I didn't say it yet, but I am not a financial advisor, and this is not financial advice. I'm just giving you my thoughts on what's going on and how you should buy to the market. So this stock, Williams Incorporated Group, is $28.63, and the ticker symbol is WMB. It says I'm down 1%, 14% for today, and the stock pays out 42.5 cents, which is just rounded down, rounded up. You can say 43 cents, you can say 42 cents, right? But since I've had this stock, I have 25 shares, and I've been up. I bought it 2 years ago. I've held this longer than others, which I should be also buying more. In this case, I would dollar cost average up. I've been trying to wait for it to come down a little bit more, closer to the price I bought it at. With this stock, I bought it at $22, and it hasn't really gone under $22 since I've acquired the stock. But good thing about it is, with 42 cents and 25 shares, 42 times 25, again, $10, 5 cents a share, right? So it's buying me a little less than half. And if I was to put in, which this might actually be a buy for me, I'm gonna probably buy it. It's also a quarterly stock. They pay out nicely, 42 cents a share. They're pretty high on the dividend yield. and the ratio. Let me go to that. Quote details. Oh, if you're on Fidelity, you could always just go to get quote. So the yield is 5.87%, which is a little on the high side for people on average, I guess. For me, it's not. That's about my normal average, and the PE ratio is 22. So it's not too bad. It's pretty good. One more stock I always recommend is Coca-Cola. Now, Coca-Cola is, for me, I am down. Oh, it doesn't show, so I must have just got paid out dividends. Yes, I just got paid out dividends, so it hasn't showed my current average. But Coca-Cola right now, KO. Where is it? KO. I got 18 shares. Coca-Cola, Coca-Cola pays out a total dividend, and it's quarterly, of 44 cents a share. I believe it was 42 before, and it went up. And the next dividend ratio, yeah, I just got paid out. This is October 3rd, so for the dividend pay date, but sometimes I get a little early. And it's October 1st, so that's not too old. Now that has a yield of 3.11%. And a PE ratio of 20 to 25%. So, 25 points on that. So with 18 shares, I get wrong numbers. 18 times. I get $7 roughly, but that's only because I have 18 shares. Now, if I had 100 shares, it would be paying me out $44.40, and that'd be enough to at least give me 3/4 of the stock, and then I could just add $12, $13 on more. Then that'll be another full share for the quarter. What I'm trying to get into, because my portfolio is not that big. The peak of my portfolio is 14,400. So once again, my portfolio is not that big. I've only been doing this for 2 to 3 years, and I'm not super. I'm aggressive for me, for what I have. I don't have a lot of money to invest at all, so I'm aggressive as I could possibly be with dividend investing. I don't really do growth too much. I do a mix of like high income dividend, low income dividend, and growth dividend stocks. So I do a mix of those three. So those three you saw there, Coca-Cola could be mid growth, high dividend, because I consider that a high dividend paying stock, and it pays out 44 cents a share. You can't really beat that. AT&T used to be one of the best too until they did a dividend cut. But one more stock I would like to put up there, and it's another one I got from one of my favorite YouTubers, Christian. He is one of my favorite YouTubers. He's one of the reasons why I got into investing in the first place, and shout outs to him. I doubt he will see this video. Is Capital Southwest. Capital Southwest, I am down 25%. And the stock price right now is, or closing for Friday, is $16.94. Now, I don't find that as being down too bad. My cost basis is $22.77. Now, mind you, a lot of these stocks I have not been buying up as of late. I'm trying to buy moves late. One of the main stocks I've been doing is Twin Harbor. I'm trying to average down in NEO. And the NOI just did a reverse split. Originally I had 150 shares, and now I have 40 shares. But that's it's a ETF. That one is another good one. At that time, I felt like it was easier to buy because it was about $5-6, and it was given 22 cents a share. That's really high. You don't see that often, and it paid every 3 months. That's another stock I could say I give out, but I have to do my numbers on that one again before I recommend anything. I have to see if the dividends changed on it. They did a 4-for-1 reverse split because they was paying out 22 cents per share. Now they're paying out 44, and now I have 40 shares, so I'm still getting the same dividend payout. It's just they came together. I guess they felt like they had too many shares out in the market. So that's about it. I haven't had time to add more stuff. I have a few more. Ooh, yeah, you can't see. I have a few more stuff that I plan to add to my position. Like, they're very low. I have some exchange traded funds in here. One of the ones I have is SCHD, SPHD, DGRO, VIG, VYM. I gotta add more to those, but I also have a separate portfolio with those for my M1 finance. So I could take them out of here. I don't have DGRO in that portfolio, so that would be a good thing. I have Realty Income, which is ticker symbol O. There's another good one, and I really need to start buying into that one because I wanted to buy into it for a long time, but I did what a lot of people do: procrastinate and wait. I shouldn't have waited too long to buy that. That would have been a perfect time for me to just buy in dollar cost average when it's low and good. They're a monthly paying REIT, real estate investment trust, and they pay monthly. It's lovely with stocks that pay monthly, and on top of that, they've been doing well for a good amount of time. I'm down. I only have 2 shares at the moment. I bought it in at $70 and it's down to $58. That's a grab. That's definitely a grab for me. And they pay out a total monthly, keyword monthly, dividend of basically you could just say 25 cents because they pay out 0.248, which is basically you could just say 25 cents, right? And it's a $58 stock as of Friday when the market closed. So grab at it if you want. Honestly, that's just me being me. Like I'm grabbing more when the market opened Monday, and I'm hoping for a dip. I'm enjoying. Excuse me, I'm a bit gassy today. I don't know why. I've been enjoying the red days a lot because I don't really look at my portfolio as much as I did when it was green. I've been looking at a lot more dividend stocks that you can hold or that's been retaining its support levels and everything. Support levels basically where if a stock go past its support level, it's going to drop, not massively, but it will drop, and we see weakness in the market like right now. But some of my stocks have been holding their areas, like WMB. It hasn't gone crazy. Apple's been holding up pretty well. I don't have Apple anymore. I sold it because for me the dividend is not paying out a lot. That's something I really have to. I feel like I have more money to reinvest back into, get into it. Microsoft I don't have. Not really major blue chip. I have some blue chip in another portfolio that I'm slowly building up, but not that much more blue chip stocks that I have. So I hope this covered the dividend investing a bit. Have a wonderful day. This is Danny from DM.